Well, good afternoon, you guys. It's been a while. I'm sorry it's taken so long to get back to you, but I've been busy with this new Tilla Respa. Woo! The excitement's killing me, man. The government is in the process of rearranging the deck chairs on the Titanic, as many of you are aware. So I'm going to bring you a few topics for today. Now, don't forget, remember how this works. At the end of the class, I ask you a question. If you email me back the answer, I put you in a drawing for free continuing ed. I'll be giving them away at the end of the year. And also, everybody you send it to, all right, they respond back to me. I'm going to give you $1 off every CE class you take. So I'll take you $1 off. Send it to 80, 90 people. You get free CE, man. Tell them to respond. I mean, I think the response has been very good on the blog. I'm trying my best. And again, I'm trying to give you an incentive to share me around. You know, Jim's a great guy. Jim Montrym, right? The mortgage broker king. Okay. All right, guys. First thing I want to talk to you about, let's just talk about this RESPA Tilla thing. Now, a lot of you are aware of this. Come August 1 of this year, 2015, the CFPB is going to be combining what we know today as the GFE and the Tilla. And it's going to be combined to what is called a loan estimate, okay? It's going to replace that. And again, for the most part, it's going to be pretty standard. Again, we have to provide it within 3 business days of getting the 6 required bits of information, the key one being the address of the property owner. Now, here's the deal, guys. When it comes to the closing, let's talk about this. The second document today, what we call a HUD-1, will be a HUD-1, again, will be a combination, the new version of a HUD-1, and the final Tilla will be called the loan estimate. Most of you are probably aware of this part. The key part is you're going to have to give that to them a minimum of 3 business days prior to closing. Now, there are certain things that they have deemed to be what are called significant changes, okay? And if any of these occur, then you're going to have to stop, redisclose, and give them a new closing disclosure. The 3 things are, number 1, if the APR changes by more than 1/8 of 1%, if it's a fixed rate loan, 1/4 of 1%, if it's an ARM loan, if the loan product changes, in other words, from a fixed to an adjustable product, significant change, and finally, if a prepayment penalty is added to that loan. Those are the 3 things they've identified and said you'll have to give them an updated one. Now, other changes that are deemed to be not as significant would not require you to redisclose and wait 3 days. Don't forget this. The old rule still applies, meaning this. The consumer has the right 1 business day before closing to see those changes. Again, you don't have to wait 3 days necessarily to redisclose and wait. But again, if there are other minor changes other than those I mentioned, the customer still has the right, and I would build it into my practice, give them the HUD-1 1 business day prior to closing. Okay? No big changes, guys. Everybody's getting all up in arms over this, but really isn't that bad. And I've got more about this in the next episode, next section of the blog. Okay, so stand by for more good news. Yeah. Another thing that I want to bring up about this change that's going to occur August 1, major stuff. Now, right now, we know that we have to give to the customer the little HUD information booklet, right? When someone's purchasing a home, technically that's when you give it to them, but a lot of us give it to them on even refis and any transaction, a little booklet that, again, explains to them about the, RESPA, truth in lending, their rights, that little booklet we've used for years. Now, once again, CFPB has decided we're going to change that. We're no longer going to be required to give them that HUD settlement booklet. They're going to replace it with, guys, basically your home loan toolkit. Your home loan toolkit, they're calling it. Now, again, it's another publication. Right now, the only place I know you can get it is directly from the government. I'm sure some of the private vendors will offer it after August 1 or even before. But right now, if you need to get it, guys, I'm going to tell you where you go to get it. And you probably should get these ordered and have them ready to go on August 1st. Because, again, this is going to replace that form. And, again, it's Your Home Loan Toolkit. It's a little pamphlet. They have a large version and a small version. Order the small one. You can put it in envelopes, size number 10 envelopes, okay? Go to bookstore.gpo.gov/products. Again, that's bookstore.gpo.gov/products. And again, look for that toolkit. That's a little pamphlet, and order the small version of it, and be ready to use that on August 1st of 2015. So again, once again, rearranging the deck chairs on the Titanic. All right, guys, let's move on to another topic. A quick one here. Fannie Mae guideline. For years, I've taught this and said, hey, listen, if you get a gift, you want to buy a home, Fannie Mae guidelines, get a big one. Because the rule used to be, if you needed a gift, if you got 20% or more from a living family member, relative, your borrower didn't have to come out of pocket with any money. Well, Fannie has made a change, guys. Literally, as of January this year, here's the rule. If you can get a gift, okay, minimum of 5%, 5%, okay? That's all you need. Okay, remember, Fannie Mae went to the 5% down payment loan, and I think this is in correlation with that. Now, the good news is, okay, some parameters. Now, to use this program to get away with a minimum of 5% down gift, all right, the borrower has to have a minimum credit score of 720, all right? Rates are what they call premium pricing. Now, that confused me at first. I thought premium pricing means higher rate. No, it doesn't. It actually means the very best pricing under Fannie Mae guidelines. Okay, so again, that is if it's a 720 or higher credit score. Basically, 5% gift, not 20%. That's cool. Now, if your borrower has a little bit lower credit score, going down to 620 credit score, here's the deal with this. Okay, you can still use a gift. And again, a gift can come from a relative, a domestic partner, or a fiance. Now, if it's going to come from a domestic partner or a fiance, the rule is they must have lived with the borrower for a minimum of 12 months. And they're going to be required to prove that, again, that they've occupied the premises in the preceding 12 months. Okay, now some bad news. You cannot use this 5% gift rule on second homes, investment properties, even condominiums will not be allowed. But don't forget, guys, the seller is still allowed above 90% loan to value for a 3% contribution. So literally, guys, you're looking at people being able to get in homes in some situations with very minimal amounts of down payment. Can you say subprime coming back? All right, well, let's hope it doesn't come back like it did before, but we can get more people in homes. So a good change from Fannie Mae, guys. Their new loan program, gift 5% down. So cool, good stuff. Okay, last thing, guys, a little topic here about credit reports. Some changes that are about to come into play. This is probably going to be implemented within the next 6 to 9 months this year. Now, you know, guys, you realize that of all the things, derogatory information in people's credit files, 50%, half, are medical related. Those of you in the industry, that should come as no surprise. And where a lot of the problems with these medical collections and issues have come from is not from the fact that the person, the buyer, the borrower, didn't pay the debt. It's the fact that the medical industry typically, if they're not paid in 30 days, standard procedure is shoot it to collection. Well, finally, it was the Attorney General of the state of New York and the credit bureaus got together and said, listen, here's the deal. We are not going to allow them medical judgments and claims to be put into the person's file for 180 days. The logic is, let's have the insurance company that pay these claims give them some time to get caught up with these bills, because so many of these people were harmed and it's such a hassle to get it straightened out, you know, once it's in there. So they're saying basically it's going to be a 180-day waiting period from the time it's filed before it goes into the credit report. That's going to be occurring this year, okay? Also, guys, the other attitude was that we're not going to put things in people's credit that there's no contractual obligation. You mean, what do you mean? Things like parking tickets, things like library fines, you know, they've pretty much come out and said, hey, that wasn't really an obligation the borrower signed for and agreed to pay. These are things that just arbitrarily show up. Now, I will say this to you. A lot of these municipalities, these parking tickets and library fines, very often they will turn them over to a collection agency. So I'm not saying it's impossible. Those types of things won't show up later on the credit report, but they can't be put in there immediately by basically the government agency. Okay? So guys, that's the end for today. Hope you got something out of this. Again, the question, here it is. Here's for the free CE. Free CE. Email it back to me. brokerschool2@gmail.com. Jim Montrym. Here it is, boys and girls. All right. What is the new minimum gift amount per Fannie Mae guidelines? All right. Send me back the answer, guys. Get in for free CE, man. Free CE for all. That's what I want. All right, now, actually, I want to make a little money too, but thanks, guys, for watching. I will see you again. Don't forget, we don't look at your past. We credit your future. Don't ever forget that. Signing off, Jim Montrym. Take care. Thank you.